So the Bank of Korea has decided to keep its key interest rate on hold this morning amid soaring housing prices and a weakening Korean won against the U.S. dollar. For more on this, we're joined today by Professor Kim Yong-Jin, professor at Sogang Business School. Professor Kim, thanks for joining us this morning.
Morning. Pleasure to be here.
So the Bank of Korea has decided to keep its key interest rate unchanged. And this was something that was widely expected, right? What's behind the central bank's decision and how will this affect the market?
Well, as you mentioned, it is kind of market consensus. The weakened Korean won has limited room for easing. The $1 exchange rate is over 1450, which is very still high. Korean won has weakened nearly 2% during the first 2 weeks of this year, which is increasing the risk of higher consumer price and stoking inflation concerns. Moreover, despite the government effort in controlling the supply, expectations for house prices, particularly for sole apartment prices, are still elevated at the moment. These are the key reasons why Bank of Korea has decided to keep its interest rate unchanged. The impact of holding the key interest rate may not affect economic condition much more in Korea, but we'll see how it happens in the near the first quarter.
Right, and still some say the difficulty the South Korean economy faces could sort of justify a cut in the benchmark rate. What's your take on this?
Yeah, that is true too. Economic difficulties Korea face, particularly weakening domestic demand and slow growth, have been cited by some analysts and international bodies like the OECD as the justification for cutting the benchmark interest rate to stimulate the economy. Growth forecast has been 1.8 to 2%, which is a little bit better than that of 2025, but still quite low. Private consumption and construction investment have been sluggish, which point to a need for stimulus to boost internal economic activities. Inflation has generally remained stable and open near or below the Bank of Korea's 2% target. The most important is that Korean economy faces long-term structural problems, including an aging population, low productivity in certain sectors, and high household debt. Despite this argument, the Bank of Korea has opted to hold the rate steady, as aggressive cut could exacerbate the existing financial stability risk. I agree to their reasoning.
I see. And while that's happening, the Korean won is sliding toward its weakest point in decades. And after the U.S. Treasury chief gave a rare verbal support to the Korean currency, the won gained as much as 1% overnight. What's your outlook for the $1 exchange rate through 2026?
Well, and I believe that the $1 exchange rate in 2026 generally point toward continued weakness. Just like in most economies, to expect the won to average above 1,400 won per dollar, potentially ranging from 1,400 to 1,451 due to strong dollar demand and elevated Korean risk premiums and potential policy uncertainty. During the first half of the year will be around, 1,450, and during the second half, it might be around, 1,350 to 1,400, when considering the supply and demand for U.S. dollars to invest in the United States. For companies, they need a lot of dollars to invest in the United States, and also individual investors requires much more money, much more dollars to invest in U.S. stocks.
Right, and speaking of investors, Korean stocks continue to rally, and the Kospi has climbed above 4,700 points, and it's now very close to the 5,000 mark, and that's a level that President Lee Jae-myung said he aimed to achieve during his term since his presidential campaign. What's driving this surge, and what makes the Korean market so attractive to foreign investors?
Yeah, it is amazing to watch that the benchmark cost be climbing faster than expected toward the unprecedented 5,000 point, right? Everybody in Korea excited. As some analysts expect, it might reach the milestone as early as this month. This accelerated, rally may surprise even President Lee Jae-myung, who promised the benchmark point during his presidential campaign. There are some reasons which are driving this bullish market. There have been proper changes in the commercial law, regulation systems of the stock market, and the taxation on capital gains, driven by the ruling Democratic Party and the government. These measures are expected to improve the transparency of the market and help minority shareholders taken well care of. Even further, the trade deal with the U.S. was well closed. Industries including semiconductor, defense, and shipbuilding are still hot, and the mood in general is very good. So foreign investors may feel Korean market very attractive due to those factors.
I see. All right, Professor Kim, thank you so much for your insight and time this morning. We appreciate it.
Thanks for having me.